Hi everyone, welcome to my channel. I'm Jan, and in this video I'm going to show you real examples of using Fibonacci lines in my trading. So I was recording videos for the last week, which were 4 trading days, and every time before placing the trades I was making the video about my analysis, how I was thinking the market will move, and I was using Fibonacci lines before placing the orders and predicting where it should move and what kind of profit I'm going to make. So it was all recorded in real life, and you're going to see it so you can see and understand how I do it, and hopefully it will be useful for you so you would understand a little bit better how to predict the market movements using Fibonacci lines. So you can see this is the week, and we had 4 trading days, and using just 10 pips per day, the profit would have been 40 pips, and using Fibonacci lines and placing some more orders, the profit would have been 180 pips. So I made around 120. Sometimes I was placing just 10 pips profit target, and sometimes I was placing it more using Fibonacci lines, but I wasn't watching the screen, so that's why it was less than 180. But if you would watch the screen, you can watch my previous video about Fibonacci, how Fibonacci works, and the way how you can trade it, not just daily trading, but using it for trading for few days, and of course getting more profit than just getting a daily profits, which is my targets around usually between 10 to 30 pips, 30, 40, maybe 50 pips. So that's what I'm going to show you every day, how I was drawing the lines and how I was thinking, and also I will be showing you the next day when the market moved and what it looked like and what the profit was. And so I trade few accounts, and some of them I place 10 pips profit, some of them using Fibonacci lines profit. So I decided to show you one of my little ones right here. You can see all the trades worked, and you can see this is starting from the 14th October. I also have here previous trades, but I decided to make to show you exactly this week, because every day it's mostly exactly the same I do, looking at the chart and thinking what is going to happen. But you can see it's from the 14th. These are the small trades, because in $100, as I'm telling you, you have to think about risks, and I was placing between 10 cents a pip up to 50 cents a pip. It depends. Usually I would put like higher risk for 10 pips, because I think it's more it's easier to get just 10 pips than to try to get more pips using Fibonacci lines when you're not watching the screen. So I think it's a bit more risky. So as you can see, I was placing around 10 pips per 10 cents per pip. And when I was going for the smaller profit, this was only like 10 pips target, it was like about 50 cents a pip. And you can see it's all the trades. One of them, you can see one of the trades is minus 12, which was 40 cents a pip. And it was on the last day, it was on Friday 17th. You can see this one's on the screen right here. And I'm going to show you what happened all these days, and exactly this one day also, why we had minus in this one, but also we had plus. So this day come out with profit. But you will understand the risks, what happens when you don't watch the screen, and what profit you can make, and also what risk you are taking. So I think it's going to be good examples, and it's going to be a long video, but I hope you will understand a little bit more by seeing real life examples of how to use Fibonacci lines. So okay, now you can watch the my trades using the Fibonacci lines. Okay guys, let's see one of the example. We have real life market, and it's 14th October, and it's about 3:30 a.m. GMT, and it's Euro USD 15-minute chart. You can see we have a little channel, which is it's kind of alright, but it started to form after 1 o'clock, and before the market actually went up, and then it went down. So it's not a very strong channel, I'd say. It's a very risky channel. But I want to make a video to show you an example of how we can, of course, risk it and try to use Fibonacci lines. So first of all, we're going to look at 1 hour chart, Euro USD, and just to see what was happening to the market and what is going on, so we can kind of predict where it will be going. And so we can, you know, that the market was going down quite a while, and after this big drop again, it's finally started to go back up, correcting itself, let's say. And so we could have draw our Fibonacci lines. You can see this one. This is Fibonacci retracement. I'm drawing it from the lower of the uptrend to the high of the uptrend. And I usually also draw it using the bodies, but you can do draw top of the wings. It all depends. Sometimes you can do it just to see a little bit that market can be a little bit low, a little bit down. So, but usually I draw it on the bodies. So, I've done this because we have again downtrend. So market decided to correct the uptrend, and now we can see that the whole hour market, all the candles are stuck in the middle, inside that channel, inside the uptrend. So right here, when we're thinking to put our trade, so it's usual, my system is usually I use, so it would be 10 pips up and 10 pips down. But as I said, with Fibonacci lines, we can improve and try to earn a little bit more pips. And that's how we can do it. So we can see that yes, this downtrend, it went into 61, and usually what we would think that that from here the market should go up again, and it will continue to go higher and higher. And now we need to know actually where it will go, because we have no any more lines up there. For that, we're going to draw another Fibonacci retracement, but from the top of the downtrend to the bottom of the downtrend right here again. And now we can see the correction of the downtrend again, the uptrend, and it also reached, so it's broke the 50 and 60 levels, which we know they are most important levels, and it's trying to go higher. But now it's all returned back to our entry point to the market, so we're going to enter here. And of course, nobody knows, will it continue going higher, going up, or maybe it will not go up, might go down. And so we don't know exactly, but we're thinking that it should actually go up. And as you know, the Fibonacci don't work 100%, not 100% accurate, but it gives us an impression what to do and how to place our orders. And so if the market will go up, we can expect, we can see that it does going up, but this side of the market, this stops right here, so we can see that this level is still higher than that, so you see it might actually go down again. But first of all, of course, if it will go up, it would have to break that level 100 and then go higher and try to get to level 161. And that's quite a big distance here. So it's, well, it's more than 100 pips, and that means it's probably more than that. That means that it's not going to happen in one day unless there are some very important news, which we do not expect this week. We have news, there will be, but not as major and huge news, I would say. So that's why I can say that I would think that the market might move to this point or maybe a little bit lower during the week, so probably going to take it a few days, but you never know. It might take it a few days, it might take it the whole week. Just if we would look at here, which also was quite a big move, so roughly let's say it was well, that was about 200 or 200 pips, and so that means, and it took about a week. It took a week, so I would say that probably would take a week, maybe less, few days. But how are we going to trade this? So if the market is going up, how I like to do it is, well, if we would look at this and think it will only go and reach this level, it can make us 50 pips. But it should definitely make me my 10 pips, because I only need to move market from this point about 30 pips, because 2 pips up and 10 pips to make my profit. So kind of more guaranteed. That's why I kind of go quite often for just 10 pips profit. But so you can risk and try to reach this level, which can bring me 50 pips, or going for a few days and it might reach the top level, 161, but I'll probably go for a little bit lower. If you have no ability to watch the market, then you would probably go for these targets. But if you have ability to watch the market, the best way to do, and that's how I used to do it, and if I have ability to watch the market, so I would usually close, if it goes up, I close 10 pips, some lots, I would close some positions, let's say not lots, few positions, and then just continue, keep going the rest of the positions up to when market is going higher and higher. You just change stop loss, and every time it goes up, you're changing the stop loss, not too far if you want to really reach a high level, so probably keeping about 30 pips below the current price, where it will be, for example, here, so you would keep 30 pips below it. But you know, if it reaches 50 and you move and something happens, market move back, you have your 10 pip profit and you will not be able to lose anything. So that's kind of the option. So one position, so we're doing again, if the market goes up, so we can put the pending orders at night. So again, my 10 pips pending order it could be, and also instead of 10 pips, as I said, if you can't watch it, you can put, for example, 50 pips. So about maybe this line. So, well, obviously, if it will get to this point, it will break it, but it's, as I said, it might not do it in one day. So it might take a few days to reach the level we need. But you can risk and you can make more than just 10 pips. So what is going to happen if the market will go down? And so how to predict where it will go? So now we kind of know our levels around here. We don't need these levels, so we can get rid of them. And I still have these ones, but what we're doing, we were trying to just draw this little one and see where that downtrend from the little uptrend is going to go. And we still have this up, the big one. You see, I didn't remove these lines because, as I said, if the market would go down even more in trying to break that one, it will go down, and we would it would be useful to use also the lines of that trend until it will break that level 100. So here is also going to look for usually the most important levels. It's 50 and 61, and so to not mess up, let's say it's these ones. So we'll have 61 around here, because the next levels are from the big move, from the big one. So we're concentrating right now for the small movement. It's going to be around here 61, which is about this point, around this point. Yeah, that's the 61 from the little, and so that's around well, saying about what, 50, roughly 50 pips you have here. So which is also, again, if you have if it's not possible to watch the market, you can place the orders, and instead of 10 pips you can try to take 50 pips profit. So you can probably just maybe put it slightly higher, so let's say put it between 50 and 60 around this area, because we also have that the bigger move also line here, so probably we just go for this one, which is going to be roughly well, let's say about 40 pips from here, well, which is not going to be really 40 pips, because we need 20 pips is our entry point, so we're like drawing 20 pips below the bottom line. So if it's 20, so we need 10, and we need so roughly I would say probably 10 pips, because here it's possible that the market can stop here around 50-60 and then go back and try to actually continue our uptrend and move higher. So in this situation, again, if it's actually going to break position, break 50 or 60 and continue going down, it will reach probably this line, and of course we'll be trying to reach this, which is about 100 pips, trying to go down more and more, which is going to happen again, can happen in a few days, not in just one day. But as I said, it depends how long you're going to trade, if you will be able to watch the market. So if you're not going to watch the market, as I'm saying, you can go for, as I said, for let's say 50-60 to be safe. So you probably just go down for just 10 pips profit. Or if you are going to watch, then when the market goes down, as I said, and you reach the level 50-60, you can close some positions at 10, so you'll have some profit, and then you just move your stop loss, because the stop loss will be somewhere around here, so you just move a little bit stop loss, and every time the market goes down, you move the stop loss and you move the stop loss, and you just continue going until the market reverses, and you're going to finally close your profit. But again, if we can see if the market, as I said, so we're kind of thinking that if the market would go down and break this position, that position, so we would expect it to go to these levels, around these levels, before it's probably will be trying to correct itself again, and then continue going down and trying to reach that level. So, well, that's how I think that's how we're going to see what's going to happen during the week, and that's how you can use Fibonacci lines. That's how I used to use it, and sometimes I also use it. But the best for me, the Fibonacci lines working when I'm trading news. It's very helpful to find out when to try to take the most profit. But if you prefer and you're ready to risk a little bit more to try to get a little bit more profit, then that's the way how you can do it. Okay guys, so let's see what happened to the market during the day, 14th October 2014. So in previous part you saw that I was drawing my channel again, and I was explaining how I use Fibonacci lines, and so let's see what happened, and if the theory worked or not, and how much we could earn. Obviously you can see on the screen already that the market moved, and I starting with 1 hour chart again, so you can see it's Euro USD again, and that was our move last day, the previous day. This is what was the uptrend, and I draw the Fibonacci lines. And now I'm going back to 15-minute chart, and now you understand where we had the Fibonacci lines. I changed the color a little bit because they were yellow, not as visible, and now it's a bit orangey color. You can see this orangey color. These are Fibonacci lines. And so here we are. You can see that was the channel last night. I was drawing it, and I was analyzing that the market could either move up and the market could move down, like a correction to that uptrend. So, and as you remember, as usual, what I was saying to you, that I draw the lines, and it was obvious we could have made out 10 pips, and we could have made more than 10 pips, up to 30 pips on that day of trading. As I said to you that right now I don't really watch the screen because it's not possible for me as I'm traveling, and obviously right now also while the move happens, I'm not able to watch the screen because it's a night time in the area where I am now. That's why last night I put the trades as usual, my 10 pips, so I made 10 pips plus additionally I made 30 pips because I put the other trade exit at the level 61, one of the important levels on Fibonacci lines, and I put it slightly higher than the level, just in case. And as you can see, the market moved quite smoothly from, well, wherever, after 6 o'clock something, it started to move, as usual in the morning. It's GMT again, AM. And it's actually reached not just 61, it's reached the 78 level. And the whole day the market was moving between these two important levels. Okay, guys, so let's see what is going to happen this new day. It's 15th October. We have again live trading market here. You can see it's 3 o'clock GMT in the morning, and that's what shows on my screen. And this is 1 hour chart, Euro USD, and I have a little bit mess here from the previous day. I decided just to leave it, but just I wanted you to see what is happening. So we still have this uptrend, which is still haven't closed. That's how I like to say it. So we have the top and the bottom, and our market is still inside that channel. So we didn't break it, so it didn't go up and it didn't go down. So it's kind of stuck in the middle. And today we're looking at again, so we can see that the market moved after 9 o'clock, after 10. So we have this is kind of a little channel which is already forming, and we're going to again think and analyze the market and think where it's going to move, so we can make not just 10 pips but make some more profits on that move. So first of all, I'm going to draw the channel again from the bottom to the top. And right now I don't need these lines, but I just wanted to show you. So if we think if this market is going to move up, then it should break that level first, and then it's going to move to these 3 levels. But to make that big move, we really need something important, some big news maybe, because it's around 100 pips move, and to reach the next levels it's 140 pips and 160 pips. You can see to reach like level 138. That's what we'll be thinking if it will be uptrend. So that's kind of a very big move, and if you're not watching the screen, I would say that's quite risky to reach that level without watching the screen. So I would have go for lower profits targets, let's say. But that's what we will be expecting if the market moves up. So it should go around this level, go up. But if we would look at the actually current position, what's happening that this level is higher and that one is lower. So we can kind of think that market is going down, except that bottom of the downtrend is lower than that bottom. So we can think that maybe market goes up. So we have like a bit kind of hard situation right now. We don't know exactly what's going to happen. We don't really need to know, as I say, if we're only going for some positions during the day. So, and using the channel as an entry point. That's why it's nice that strategy, because we don't really need to exactly know where it moves as long as it moves one or the other direction. So we kind of forget about this uptrend for now. I'm going to remove these lines. So I will be taking Fibo and drawing it right here first. So we can see what was happening because we had this downtrend, and we want to see if it will correct itself. So it was going backwards just a little bit. It stopped around level 23 and it's returned to our bottom line, and you can see it's again is broke down and looks like it's actually moving down and probably going down more, trying to break this level, which is roughly our 138 position, and this will be one of our target lines if the market goes down tomorrow, today. So roughly around here, so we still can make our 10 pips if it only reaches, if it's only going to reach 138. We're going to see on the 15-minute chart how to draw the channel. So to make our 10 pips, because we really need about 30 pips move from this bottom line to make our 10 pips profit. So if we will be thinking that it's finally going to break that level and move down, that it should go to 161 first, and then hopefully it will reach 200. So if we're not going to watch the market, then we would probably better go just for 161. But if you're going to watch the market, then I would say you can put alarm on Fibo lines. So the first alarm is going to be 138, where we're going to collect some of our profits from this entry point, and then we're going to move again our stop loss from here is going to 30 pips above, right? So we're moving about 10 pips down, and again 10 pips down when the next is going to be reached by 164, level 164, and moving down, and also we will be moving from the previous trade. If you had it open, it will be also moving down, and you will be also moving your stop losses. So that would be a very good plan. We'll see what's going to happen, but at this point I would say that probably so I will be going for my usual 10 pips profit, trying to take 10 pips down and profit 10 pips up. And if you can't watch the screen and if you will be placing the trades, if I would be doing it without watching the screen, and what I'm going to do is to going up for the uptrend, I will be placing the profit target around 50.61, and for the downtrend I will be trying to put the orders and take the profit. It will be targeted around 164. So roughly the next day should bring me around again between 10 to 30 pips. So that's kind of the plan. So we'll see what's going to happen. But as I say, if you have ability to watch the market, then moving stop loss every time it moves to the next line, that's quite a good possibility to make much more pips than just 10 to 30. So we'll see what's going to happen in the morning. Okay guys, so let's see what happened today, 15th October 2014. What kind of trades we had, and how the market moved, and how much pips you could have made using my system and Fibonacci lines. So as you remember in previous part, we had our little channel again in the morning GMT. So I was drawing it around 3 a.m. GMT, around here. So I had as usual my little channel, and I draw as usual 20 pips up and 20 pips down, and the profit 10 pips up and 10 pips down. And also using Fibonacci lines, I put the other order to make 40 pips, which were around level 61. And also I had another order which would go down, so I made an order around 138, 160, so somewhere around here. So as you remember before, I was telling you that we were thinking that the market might go down and reach this area. If it would be news, it would go much lower, and if the market would go other way, which it actually did, as you can see now, it's still live chart. Right now it's the 16th and 3 o'clock in the morning GMT. So that is, remember I told you, if there will be good news, the market will go up and will break the 100 level, and also will continue move even higher. But we didn't know if it will happen or not. There were some news I knew about, but you never know how far market would move. And I always say with Fibonacci lines you can make very good profit if you are actually watching the screen. So that day you could easily walk out with profit 100 pips, and that's how I used to trade before when I was able to watch the market. Today I wasn't able to watch it, so I only walk out with my usual 10 pips, and also I walked out with 40 pips profit. So now let's see what would happen if I would watch the market, and if you would follow also the system which I'm trying to teach you and show you the way I used to do it. So how would you could make this 100 pips in just one day. So you see that was the channel as usual, and by the way, many of you are asking, so why we have stop loss 30 pips? Why wouldn't you just do instead 20 pips? Because look at this. When we put this trades for the market, you can see that the market took us in a trade right here, and from that point, if you would have only 20 pips stop loss, then you can see it would stop right here where the our channel, and you would have been in loss, so you would lose 20 pips. But because we had 30, it's right below the our channel, and so when the market moved backwards a little bit, it didn't touch the stop loss, and so it returned back and started to move, of course, on the news, when the news release. It's actually moved before that, because the news were I think around 12:30, and lots of news for US, and actually the first profit for 10 pips I already made around 11 o'clock, but for the 40 I was still in the trade. So when the news come out, I was already in a trade for the 40 pips. So that's why 30 pips is stop loss is for a reason. So I guess I answered your question, because many of you are asking. And so here we are. We had the market moved. Actually, the market moved perfectly how it would usually move, because look, previously we thought we had like really big move up. You can see it's a half of the move up. Then the market went down, and we were expecting what Fibonacci usually works. So it reached this move, reached I think around 60 points, around 60 level, and then it was supposed to go higher, and actually was supposed to go higher and break that level. But in this part it didn't happen, and here it happened exactly what you expect from Fibonacci kind of theory. The market moved up, then it corrected itself, and it moved up and broke that top. So this is, if the market would always move like this by using Fibonacci, that would have been just perfect and making money all the time. But it's not happening always. That's why I like to use my system and draw the channels and do all the entry points, 20 pips up, 20 pips down. But as I said, with using Fibonacci lines, not just 10 pips, you can make much more. So as you can see, the market moved. So how you could trade? As I said, I made 10 pips, and I made an extra 40 pips by using Fibonacci line and taking the profit from one of the important levels, 61. But if I would have been watching the screen again, then I would have just moved my stop loss. As I told you, every time it reaches the important levels, you just move your stop loss 10 pips higher from your previous one. So, well, let's say if when it moved to 61, you move your stop loss so it's around 30 pips. It would be around here, just right slightly below level 38. Then it reached level 100. That was one of the important points here when it reached that top. So we could have made 80 pips here too. We could have closed some positions maybe and leave the rest to run just to see what would happen. But you know, when the news like this will happen, what you could do, if it would be very quick and lucky enough and the broker could offer you a really good option to come out from the trade, but because it was like this swing, then you there is no guarantee on this one that you could have a right price to come out from the trade. So I'm not going to lie to you and tell you the fairy tale like you could have really make let's say 200 pips on this right move, or 170, so you would reach right to this. Maybe if you would risk it, you could have done it, but usually well, I trade safely, that's why I wouldn't do it. But anyway, let's just check out the other Fibonacci lines, because as that level is important, 100, it's breaking our up movement, the previous up movement, and we also have another top right here, which is also important, and we're expecting market to break that level too. So we know if it will break this level, and then next this level, then it should go even higher. But how far we would think it should go? So that's why I would draw the other Fibonacci lines again from the previous move up, which I was showing to you earlier. So I would say probably here, when it was around 100, around this area, then I would think that the next it should move up to 138. After 138, it should go for 161, and then it should reach 200. So it would have been a perfect movement, because look, around 200 we can say that, you see, it's finishes. There are no any lines. So that means that this uptrend would say it worked out itself. So if you know that the market can move right here and you can come out here, I would probably close all the trades right here and come out with the best profit, because you know that when the news happening, which I will be making video about, the trading the news, that the market would roughly can move up to 200, maybe slightly more, but you know, it wouldn't move much more than that. So we have like another level, but it's very high, and it's just not higher probability it's going to go so high. So you say 100 pips you expect to walk away on a good news day, 200 if you're lucky, 150 maybe. So as I say, if you're watching the market and you can see it moves very fast in your favor, in your direction, which was perfect, and then you see the market actually goes and reaches this level 161. So if I would have been watching it, I would have been trying to close the positions around this. But as I say, if the market moves very fast, so it might jump higher, maybe it would have closed you right here, or it might jump back and you might come out with your trade around here. But doesn't matter, you would still, it's definitely on this move, you would have made 100 pips. Well, I'm telling like how I would do it. So for me, that would have been 100 pips. Sorry if I say some kind of really different, not sound right. I'm saying lots or pips. You know what I mean? I mean always in pips. So 100 pips, not $100, just 100 pips. And it depends how much you trade. You can trade $1 a pip, $10 a pip. You can trade 10 cents a pip. It's all in pips. So we have 100 pips profit on this trade. But as I say, if you would have been moving your stop loss 30 pips below just to be safer, just in case, you never know what can happen. So when the market would move from this level 118 to another, from 100, it would move to 118. So we could have, when it would reach, we could have moved our stop right to, again, not right to here, but 30 pips below it. So if it would be 30 pips below it, so you could have walked out still with just 80 pips profit. But You could have, if you will check, let's say 5 minutes, we can see what was happening out there at that time when we had, we have 100. So that was our 100, but actually looks like you would walk away with about, you could have walked away with about 100 pips, because we have 100 pips just slightly higher than 80. So looks like that move wasn't even that quick or fast, because we still have quite good bodies of the candles. It's the only this part of the candle was very quick. So you could have closed here your positions or moved 30 pips and walk away with the profit between 80 to 100, or even more than 100, like 150 you could walk away with if you would close at level 160. Then it looks like it was possible when you're looking on that other one. So you could have walked away with about 180, 170 pips. So but not gonna be too excited, but still 100 pips, it was very good possibility to make that kind of profit. So that was a really good trade, and perfect. 16th October, again 2014, and right now is around 4 a.m. GMT. I'm going to place my orders soon, but before that we're going to see what I'm thinking was going to happen next day. So you see, we had the previous day the market was going up, and now I can draw my Fibonacci lines. It's a 1 hour chart on Euro USD, and now, so we're going to think that maybe it will be correction of that uptrend, or probably the market will continue going higher. So now we're going to 15-minute chart, and as usual, so what I'm looking at, I have my channel, as you can see, it moved, so the market moved up and then returned to this little channel, which happened actually again before 12 o'clock, but then market moved up a little bit, and now it's going back to this little channel. So I draw it this way, and going to make orders soon, pretty soon. But so what I'm thinking of, if it will go down, will be correction. So I would think, as usual, we know that we think in the market would go to the important level 50, 61, and possibly 78. We will have news that day, but not as huge news as we had previous day in here. Lots of news, not very good news for US. That's why the market moved up. Today we will have news, not as many as it was yesterday, not as important as yesterday, and so on that kind of day, I would think the market might move up to 100 pips, well, maybe maximum, I would say. So it might come back to 61, but in this at this point, I would probably better to watch the market to reach these levels. So to be a bit safer, I would probably put my trades as usual 10 pips down, try to get my usual target, and also probably around 38, just to be safe, because it's already going to be around the 49, 50 pips target from the channel. So roughly, if it's 50 pips move down, and I have my 20 pips safety, so it's 30 is 10, so it's about 30 pips down. I'm thinking of to get as a profit. But the plan, if watching the screen, as usual, we are hoping the market would go to level 61, 78, but every time the market goes down and down, we're just changing the stop loss. And so the other option again, if the market will go up from that, same thing, I'm planning to make my 10 pips, which I need 30 pips movement up. And which going to happen is because it's around here, and you see it's not that far to make it 30, but I would think that it should move at least up to level 118 and make now 50 pips, which is so it also should be roughly to make 30 pips profit. So the movement of 50 pips should bring us roughly 30 pips profit. So let's see what happened on the 16th October, what kind of trades we had and what kind of profits we walked away and could walk away also. So here we are, we have the chart. Here is this 1 hour chart, Euro USD, with the results of what happened today. So we had this uptrend, as you remember, and from that I was looking for the trades for the next day to see where the market should move. And so I'll go back to 15-minute chart. So you remember we draw these Fibonacci lines, and we had the channel here, which is, I say, the hard channel, because the market was kind of moving up all day and in the evening, so it started to come down, then it went up, and then it come back and created this channel too, which is together with that channel. That's how I draw it. And as usual, as you remember, I told you that I was analyzing the market and using the Fibonacci line, thinking that from this channel it would have moved around 100 pips, because we had some news, but they were not very important news. So, but they were the news which would move the market for at least around 50 to 100 pips. Either direction, we didn't know where it go, either up or down. But as the market moved down, as I was expecting, it stopped around 60 Fibonacci line. So as usual, I made my 10 pips profit, and I was trying to play safe, and I wanted to come out at 38 level. So that's what I did. I closed the trade around here because I wasn't watching the screen. And so I walked away with 10 pips and I walked away with 30 pips profit. But in the other scenario, if I would have been watching the channel, that's how I used to trade, I would have watched it and I would have closed few positions as usual at 10 pips and waiting for the market go to level 38, and I would move my stop loss 38 from that line, 30 pips from the Fibonacci line, and then I would be waiting for market to move and to 50 and move stop loss. And also when it would touch the 61, I would move it to 30, and then the market would return. It would have touched somewhere around our stop loss, and at the end of the day we would walk away with 50 pips profit. So not bad, I would say, but if you would have wanted to close the trades completely that day, so you could have closed at 61 level, which would have made you about 80 pips total. But as usual, we were trying to catch maybe a longer move, so if you would have been expecting it to move more and more and move in the stop loss, then you would walk away with 50 pips profit. So that's how you could have made more pips on that day, more profit, by watching the screen and using Fibonacci lines. It's 17th October, it's around 5 o'clock in the morning, so let's see what is happening right here and what I'm going to do, what kind of trades I'm thinking to put in, and where to take profits. So this is a 15-minute chart, and as you can see, I have here a little uptrend, and now I draw the Fibonacci lines as usual. You see from the bottom of this trend to the top of it, and the market stopped around level 23, and as usual I'm having here a small channel, so around here you can see that one is come out a little bit from it, and so from that one I'm expecting the movement of the market. For example, it might go down and stop at level 61, so I would say that I would probably going to make my 10 pips profit around here as usual, because we need about 30 pips movement, 20 pips down and now 10 to make profit. And also I can think that it might move to 78, and if we are expecting a downtrend movement, so it might move to 100. And if I will draw the channel from the top of the downtrend to the bottom, because you can see that this channel is now creating around this downtrend, so between this top and this bottom, so it's kind of inside that channel. Of course, it's going to break it at one point. Maybe not today, maybe today there will be some news, but not expecting as strong news as it was yesterday. So if there would be for example, mild news, so I would think it might move, well, let's say 100 pips, yes? So it might reach level 100, even 127, 138. So I would be expecting, for example, if there will be enough movement on the market today, so it will probably try to reach 138. If not, if it will be slower, so I would say around only 50. So, well, let's say safer, I would stop around 78 level, so right here. But watching the chart today as usual, you would be placing the trades as usual, changing the stop losses and moving down. But as I say, we'll be trying to get to target 138, but it all will be visible how the market moves during the day, how strong it is. So this is what would happen if the market would go down. Now what would happen if the market would go up? And again, from the top line of the channel, roughly here, so we'll have that level. So if that would go on up, as you can see, we have here important level, and we have another two levels here, and I would think the market is probably will be trying to reach also that height, so around here between 161 138, so we have about 8 pips something. So I would think it's probably going to try to reach a higher level, 161, maybe even go high if there will be news. So if we will be watching again, we will be trading step by step, moving the stop loss. But I'm not going to watch it, so I'm trying to think what to do and how to place the trade. So I will be placing the trades as usual, trying to get my 10 pips profit. So I need about 30 something pips movement, so it should be around here somewhere. Will the market reach it? I think it will, because, so here's how I see it. We have here one top, as I said, another, and three tops we have here. So I would think market will reach it, and it will try to break it. And if it will break that level, it definitely is going up and trying to reach higher levels, at least up to 138. So it depends if there will be, let's say, not very strong news. So I would think it will probably stop around here and close the date maybe around here. If there will be good news, strong movable news, so around 100 and maybe higher, so we would think the level 161 that day. So I will be placing the trades probably. So if I will be trying, let's say, to get around level 78, roughly 50 pips from the level 23 from the channel, so it will be slightly less than 50 down and around 50 up. So I would probably will go for the trade just below 138 and trying to make 50 pips, which should bring me around 30 pips profit. So that's how I'm gonna place my trades today, and we're gonna see tomorrow what's gonna happen. Okay guys, so let's have a look what was happening on 17th of October, how the market moved and how much we could earn possibly and lose. Yes, we had some loss on Friday, and I'm going to show you what happened. So as you remember, yesterday I was looking at the channel and I had my Fibonacci lines, and you can see we had not very good channel, and I was probably saying that the channel was really hard, and if you trading using the system, you probably wouldn't go for that trade. But I decided to risk it, to try it, because I've been doing all the week from Tuesday. I missed Monday, so I thought from Tuesday till Friday I will go for these trades to show you live market, to see how it works and what happens and what risks we are thinking of taking by trading it like that. So first of all, when we look at 1 hour chart, So I don't remember, I think I actually even said to you that I would probably miss that day and wouldn't trade it if I wouldn't be making it just to show it to you. But because the market was not very pretty, I would say, because look what was happening, that and one day market moved up and we had like this really big wing spike. I like to call them spikes, really. And that's kind of always worry when something like this happens, because you know that the market is kind of unstable for me, and in my eyes, I would say. So the market moved up and then it was correcting itself. It's actually reached the level 60. As you remember, it was 78 level. And also we had here is a bit spiky, as you can see also here. So that's another thing which we really need to think of. And so the market after that tried to correct again, and it's kind of stopped here, and you see we were right around here, and we were like thinking maybe it would go up, probably, or we'll try to go down. So we're still kind of inside this movement, and now we were stuck inside this downtrend moving and inside that uptrend moving. So it's getting like narrow and narrow and narrow, so it's less stable, I would say. But I still decided to have the risk. And also there is another thing. On 1 hour chart, you can see it was a little bit hard to draw Fibonacci lines, because we have spike here, and usually I like to draw it using the bodies of the candles. So here, if I would draw it by the bodies of the candles, then on 15-minute chart it also wouldn't look right. So that's why probably it would have been better to avoid the trades completely. But let's say I took the risk, because you never know what can happen. So yes, I did it, and you can see on the 15-minute chart, but the spikes were very long. So that's what I'm trying to say. Here it's not as bad, but this one is quite bad. So that's why it's kind of a little bit risky. So as usual, we had our channel, very bad channel. Again, I'm saying to you, better not to trade this, because you see how big the distance is between the candles which are trying to go back into the channel. You see the distance here, and mostly the candles didn't stop inside, and they didn't create the most of the candles inside. Like if it would look like this, we would like to see something more which would look like this. So candle and candle, candle and candle inside the channel. But I decided just to give it a try, because as you remember, again, so we have here level 23, and that was my top line for the channel. So I was thinking, okay, let's see, can I make at least my 10 pips profit that day? So I was drawing the line up and looking at it. If it will reach this level, I probably ain't going to make my 30 pips. 30 pips movement, I need to make 10 pips profit. But I had this little wing, and I thought, okay, so I really need just a little bit to move, and I probably will be with profit that day. And that's why I decided, okay, so I will put the orders, and as you can see, market moved, and I made my 10 pips. So very kind of tiny possibility, but it happened. So I made my 10 pips just how I thought it will happen. And I was thinking what would happen, how to put the below line, because as I said, it's very hard channel. And so I took these 2 candles as a base, and tried to draw using also this candle, and we had some little ones candle, and another one was here. So I thought, well, okay, let's try and see what would happen if the market would move down again. I only need 30 pips movement to make my 10. So if I thought the first level would be 38, right? And then it would be 50. So if it would have stopped around 38, it shouldn't have taken us in trade, because we have our 20 pips first, which would have been around here, before we will go in a trade. So I thought, okay, right. So if it's around 50, if it will touch it, then it will probably move a little bit down more, so I can make my 10 pips again, because we know that usually market breaks the 50 and stops around 60, 78, or maybe between 50 and 60. So I had a possibility to actually make my 10 pips. That's why I decided, okay, I will risk it, because also, as I said, we knew that there were some news, not very big news, but still kind of news. If it would be no news at all, then I wouldn't go for trade at all that day. And especially Friday, and very careful has to be with Fridays, because it's the last day and the market is going to stop and stop working for the weekend. So, and of course, Fibonacci lines again. As usual, if you will be watching, I would have, as I said, in this quiet situation, we would expect moving about 50 pips. And so I put the other order because I wasn't going to watch the market. And just below 127, I thought, because it's very quiet market, so I will do it right below 127. And going down, the same from level 23, probably about 50 pips. So that's why I decided to put the next one a little bit higher than 78, so around 78. So I thought, okay, I'll put 30 pips up and 30 pips down profit, just in case if one will go back or the other one, something will show up, come out, and at the worst case, I would not lose anything, or it would be lost 30 pips. So you never know. So, and that's what happened. As you can see, the market moved up, and it took me, so I had two, as usual, few orders. The one is for 10 pips, so I made my profit 10 pips as usual. And then the market took me into this other trade and moved up to this level. And then I moved down and I moved up. So you can see, as I was saying to you, it will be trying to break that point. So that's why we had it twice coming back to this, but it didn't break it. You see the next candle closed with red and went down. It's if that one would go higher than this one, we would have reached our 30 pips target and maybe even higher, but it never happened. And that's why market returned. So it made me lose 30 pips because I had 30 pips target and 30 pips stop loss as usual. And then market moved down and it took me into the other trade. And so I got another plus 30 pips profit on level 78. So at the end of the day, it's all closed with no profit for Fibonacci lines, but I still walked away with my 10 pips profit as usual. That's why I'm trying to tell you that many of you think that 3 to 1 is a high risk. But as I say, yes and no, because you can see it's more chances to get you 10 pips than to get higher profits than 30 pips, for example. As we're like trying to catch the bigger profit, we will have more losses before we will reach our targets. So you might have few losses before you will make profit. But with 10 pips, in my eyes, as I'm trading it, it's much more successful than trying to get bigger profits. So here we go. It was a very risky day. I would say better not to trade. But if we would have been watching the charts, so you would have reduced a little bit, as I say, your risks, because as I like to trade it, the way when I'm watching the charts is that close few positions at 10 pips, and then the rest of the positions waiting, market going higher and higher on each level, and just changing the stop loss behind it. So closing a few positions here would reduce the complete 30 pips loss when it was going backwards. And also right here would have been the same. I would have closed 10 pips as usual, around here probably, and then we'll be watching, just moving the stop loss. So that's how it would work, except not way here where it was moving 30 pips, because it was Friday, and you would better do it during the day, trying to get bigger targets. But this is Friday, I would have just probably closed at 78, especially knowing that I already made loss here. So I would have closed everything and just start a new week without open positions at that point. So here we are. This is how the market behaved and how it worked.